Here's a detailed summary of 3M's 2026 Q1 earnings call, designed for clear and concise delivery. Introduction. Welcome to 3M's first quarter 2026 earnings conference call. Today, we'll discuss our financial performance, future outlook, and key strategic initiatives. Financial highlights. Q1 2026 earnings per share, EPS. 3M reported a solid EPS of $2.14, representing a mid-single-digit increase year-over-year. Operating margin. The operating margin saw an improvement, increasing by 30 basis points to 23.8%. Free cash flow. Free cash flow exceeded $500 million, marking a double-digit increase from the prior year. Shareholder returns. In the first quarter, 3M returned $2.4 billion to shareholders, comprising $400 million in dividends and $2 billion in share repurchases. Revenue and growth. The company experienced a somewhat subdued start to the year on the top line, with organic growth of 1.2%. This was attributed to pockets of macroeconomic pressure across certain segments. However, management noted encouraging order trends that support an outlook for acceleration in the latter half of the year. Key operational improvements and strategic initiatives. 3M highlighted several key areas of execution and progress. Commercial excellence. Benefits are being seen from improved sales effectiveness, reduced customer attrition, and advancements in cross-selling opportunities. Innovation. The pace of new product introductions is accelerating, with 84 new products launched in Q1, a 35% increase year-over-year. The company is on track to launch 350 new products in 2026, exceeding its Investor Day targets. Operational efficiency. On time in full (OTIF) service levels have been maintained above 90%. Inventory has been reduced by 3 days, and delivery lead time shortened by 25%. Overall equipment effectiveness (OE) improved by over 100 basis points year-on-year. Cost of poor quality decreased by approximately 100 basis points. Transformation and simplification. 3M is undergoing a broad-based transformation to simplify processes, reduce complexity, reshape its portfolio, and improve resilience. This includes facility consolidation, with a projected manufacturing site count below 100. Significant investments are being made in automation to enhance safety, reduce labor costs, and increase yield. End market performance. Strong segments. Approximately 60% of 3M's businesses showed relative strength in Q1, including general industrial and safety. Strong order trends in these areas provide visibility. Areas of softness. Macroeconomic and industry-driven softness was observed in about 40% of the portfolio. Electronics. Flat year-over-year growth, with strong performance in semiconductor and data centers offset by softness in consumer electronics due to industry-wide memory chip issues. Orders, however, were up double digits, driven by semiconductor and data center activity. Automotive. The market was soft, with global build rates down. Consumer. Continued softness in U.S. consumer discretionary spending, though point-of-sale (POS) trends improved over the quarter. Orders and backlog. Overall orders grew slightly over 10% in Q1, and backlog grew double digits sequentially and year-over-year, providing positive momentum into Q2. Strategic acquisitions and investments. Madison Fire and Rescue acquisition. This strategic transaction will combine with Scott Safety to create a significant global fire and safety business, strengthening a priority vertical. Data center and power utility business. 3M highlighted the growth of its data center and associated power utility business, introducing new products like expanded beam optics (EBO) to address growing AI demand and investing to double capacity. Management commentary. Bill Brown, Chairman and CEO, expressed satisfaction with solid Q1 operating performance, driven by strong execution on productivity, cost discipline, and commercial rigor. Emphasized the company's confidence in achieving full-year 2026 guidance despite a volatile environment. Highlighted the strategic importance of commercial excellence, innovation, and operational excellence in building a stronger foundation. Detailed the ongoing transformation aimed at simplifying operations, reshaping the portfolio, and improving resilience. Expressed optimism about the pace of new product introductions and the company's ability to execute consistently. Anurag Maheshwari, Chief Financial Officer, confirmed a good start to the year, performing ahead of expectations on orders, margins, earnings, and cash. Provided details on business group performance, noting momentum in safety and industrial, a flat but improving transportation and electronics segment, and a slight decline in consumer. Reiterated the company's full-year guidance for organic sales growth of approximately 3%, EPS of $8.50 to $8.70, and free cash flow conversion greater than 100%. Forecasted acceleration in growth for the second quarter and the balance of the year, supported by strong backlog and order momentum. Anticipated approximately 100 basis points of margin expansion for the business groups this year. Stated that the first half of the year is expected to have higher EPS than the second half due to a contingency for the latter half of the year. Future outlook and guidance. Full year 2026 guidance reiterated. Organic sales growth, approximately 3%. Earnings per share, EPS $8.50 to $8.70. Free cash flow conversion, greater than 100%. Cadence, sales growth is expected to accelerate in Q2 and the back half of the year. The first half of the year is projected to have higher EPS than the second half, with a contingency in place for the second half. Pricing, expects approximately 80 basis points of price increase for the year, with an additional 50 basis points due to oil price impacts, bringing the total to approximately 1.3 points. Price increases are being incorporated into base product pricing, with rollout in various regions beginning in April and May. Significant risk factors mention macroeconomic volatility. The company acknowledged the ongoing uncertain macroeconomic environment as a key factor influencing performance and outlook. Input cost inflation. Rising oil prices are leading to increased input costs, which the company is managing through targeted price increases. Supply chain disruptions. Potential supply chain bottlenecks, particularly concerning specific raw materials, were discussed as a consideration for contingency planning. Consumer spending. Softness in U.S. consumer discretionary spending remains a factor, although POS trends have shown improvement. Lowlight's light start to top line. Organic growth of 1.2% in Q1 was below what might be desired, primarily due to macroeconomic pressures in certain sectors. Consumer electronics and automotive softness. These sectors continue to face headwinds, impacting performance in the transportation and electronics and consumer business groups. Overall sentiment management expressed confidence in 3M's execution, operational improvements, and strategic initiatives to drive future growth and value creation. The company is focused on strengthening its foundation, controlling controllable factors, and delivering profitable growth. Thank you for your attention.